Lawyers acting for the heirs of the late Sulu Sultan, Sultan Jamalul Kiram II, are understood to be in the process of submitting an application to the Dutch courts to seize assets belonging to Petronas. Sources familiar with the matter tell The Edge. Petronas, via Dutch companies such as Petronas Carigali Canada, Petronas International Power Corp and PLI Netherlands, has extensive assets in Canada, India and Indonesia, among others. The source told The Edge at 5 p.m. that the process of submitting the application was done about an hour before. The source declined to elaborate more but said that the assets that could be under siege could be worth a lot, in the billions probably. The Edge understands that Petronas and the Malaysian government are already aware of the plan to seize the assets. Backing the Sulu Sultan's heirs in this venture is Therium, a company registered in Jersey in the English Channel and headquartered in London, and is one of the world's largest litigation funding firms. This action comes after bailiffs acting for the Sulu Sultan seized Petronas Azerbaijan, Shah Deniz and Petronas Caucasus in Luxembourg, both of which belong to Petronas, to satisfy a $14.92 billion award by the Spanish arbitrator Gonzalo Stampa. To recap, the legal dispute erupted after the 8 heirs of the late Sulu Sultan initiated international arbitration proceedings against the Malaysian government in January 2018 in Madrid, based on an 1878 agreement between the then Sultan of Sulu, Sultan Muhammad Jamal Al-Alam, and Baron de Overbeck and Alfred Dent, which granted perpetual sovereign rights over what is parts of Sabah today in return for an annual token payment of 5,300 ringgit. This was stopped in 2013 after an incursion of more than 200 armed militants who invaded Lahad Datu and resulted in 78 deaths, caused a breach in the 1878 agreement. Malaysia claims the militants are linked to the Sultan of Sulu, but the heirs dispute the claim. Bursa Malaysia reversed earlier gains to close in negative territory, with the benchmark FBM KLCI falling below the 1,400 psychological mark due to a lack of buying support, according to an analyst. At Thursday's close, the FBM KLCI slipped 4.39 points or 0.31% to end the day at 1,397.5. It had opened 5.5 points higher at 1,407.39 and moved between 1,395.81 and 1,410.76 throughout the day. On the broader market, decliners outpaced gainers, 499 to 343, while 412 counters were unchanged, 1,147 untraded, and 57 others suspended. Total turnover increased to 2.28 billion units worth 1.86 billion from Wednesday's 2.14 billion units worth 2.06 billion ringgit. Rakuten Trade Vice President of Equity Research Tong Pat Leng told Bernama that he expects investor sentiment to remain jittery for the moment due to continuous selling by foreign funds and external factors such as increasing market risks and volatility in global markets amid the multi-year high inflation in the United States. Tong says, however, the FBM KLCI remained in an oversold position after recent heavy sell-downs and expects the benchmark index to consolidate within the range of 1390 to 1405 towards the weekend. Meanwhile, key regional indices ended mixed despite overnight gains on Wall Street, capped by growing fears that aggressive interest rate hikes by central banks might tip the global economy into recession, according to Thong. Scientech says it will take a more aggressive approach in opening up new markets with the progressive expansion of its production plants. In a statement accompanying its fourth quarter results, CEO Lim Peng Jin says that the group will continue to bring new packaging innovations and develop value-added and customized products, as well as sustainable and fully recyclable solutions. Scientech saw its net profit decline 12.4% year-on-year to 125 million as it was hit by higher tax and interest expenses amid margin compression that it saw at its property segment. In contrast, Scientech saw its revenue for the quarter surpass the 1 billion ringgit mark for the first time as its top line improved by 14.5% year-on-year to 1.11 billion due to improved packaging business sales. The group proposed a final dividend of 5 cents per share, bringing its FY22 total to 9 cents, unchanged from FY21. For its full year report card, Scientech's net profit fell by 10.4% year-on-year to 409.87 million, despite a 9% increase in revenue to a record 3.99 billion ringgit. Looking forward, Lim says that Sintex is optimistic about achieving a stable performance in FY23 as it strengthens its operational resilience and supply chain efficiencies. He says the recent acquisition of Taisei Lamek Malaysia provides an immediate foothold in the fast-growing film business for liquid and paste packaging, as well as enhancing its diversified offering, especially in the F&B sector in Malaysia and regionally. As for Sintex's property sector, Lim says the group remains committed to bringing more affordable homes to the Malaysian population with the launch of its maiden project in Sungai Petani Kedah in FY23 with the aim of expanding its footprint into more states. Furniture maker Poh Huat Resources Holdings net profit for the third quarter jumped 64.2% year-on-year to 22 million, boosted by strong turnover growth in its domestic operations. Revenue for the quarter grew 9.2% year-on-year to 166.5 million from 152.5 million as production activities in both its Malaysian and Vietnamese operations ran smoothly on the back of sustained orders from its customers in North America. It declared a second interim dividend of 2 cents per share. Looking ahead, Poh Huat says it is cautious of the fluidity in the global economic condition and its impact on the group's operations and financial results for the immediate future. It also said that the worsened global economic outlook, inflationary pressures, lingering geopolitical tensions, together with labour supply restrictions and increase in wages, will continue to put pressure on operations. However, Poh Huat says that the strengthening of the US dollar should cushion the group's profitability. Chinese Berjaya Credit, a JV between Berjaya Corp and Taiwan-based Chinese Holding Co., is planning a 1 billion ringgit bond sale, according to a note by Malaysian Rating Corp. Mark said that CBC is looking to expand its financing operations for new motorcycles. The ratings agency has assigned a preliminary rating of AA- on CBC's proposed 1 billion medium-term notes program with a stable outlook. The program carries an unconditional and irrevocable guarantee from CBC's ultimate holding company, CHC, according to Mark's analysts. CBC is a 70-30 JV between CHC and B Corp. CBC, with a financing portfolio of 1.9 billion in the first half of 2022, expects to maintain its current double-digit annual growth rate, but with the interest rate environment coupled with inflationary pressure in mind. In the first half, CBC's interest income rose 16.6% year-on-year to 142.2 million, corresponding to their pre-tax profit that rose to 69.4 million ringgit. Mark pointed out that net interest margin has also been strong, hovering above 11%, and CBC relies primarily on bank borrowings, which grew in line with its asset growth at 1.5 billion as at end first half of 2022. The analyst explained that CBC's growth has been supported by periodic capital injections from its shareholders, CHC and B Corp, totaling 175 million since its inception in October 2015.